Hey everyone, it's Imran from Options Insight with your macro options spotlight. Okay, so S&P continued to kind of drift higher into the midterms yesterday, but it did pull back from its highs after all the crypto carnage, which we'll talk about. Metals had a rally, gold up over 2 with copper. Oil pulled back nearly 3%. That was on the back of higher inventories. And also COVID cases in China starting to rise again. So, all this reopening optimism, we're going to really find out what they're planning to do on COVID pretty soon, it looks like. And the dollar remained on the back foot as bonds recovered slightly with that TLT bouncing about 1%. Okay, in terms of vols, we saw a bit of a pop in vol, nothing massive, but about half a vol in S&P. And half a vol in gold. Obviously, gold moving 2% on the day. S&P only up 50 bips on the day, but still seeing vol pop by half a vol. And I think that was really on the back of the crypto stuff, where we pulled back sharply off the highs, and that got people a little bit nervous. Most other assets saw vol drift a bit lower as we await CPI tomorrow, and things maybe get a bit more lively again if we get a number that's not quite in line with expectations. Looking at realized. Carries flipped negative on gold. So now we're looking at negative 30% on gold. We're obviously massively negative in copper as well. Bonds showing up as your only kind of place for positive carry, really. But I'd probably wait until the inflation print to sell any gamma in bonds, as that might be a little bit risky to jump in and do that right now. And then if we look at skew, we can see that we did see a little bounce in skew there. Again, I just think on the back of what was going on in crypto, maybe some people kind of wondering whether there was going to be some contagion and buying a bit of crash protection there, because we certainly are crashing in crypto land. But outside of that, seeing skew softening in China still. We saw gold skew flip to negative, which means now calls trade at a premium in gold. So people getting excited about the breakout in gold potentially if it's coming. Skew in oil bounce for puts. So that had been for calls, as people were kind of thinking oil might be breaking out imminently, but now all of a sudden we've drifted back down and it's gone back towards very slightly for puts. And then lastly, the only other thing of note is HYG continues to make lower lows in skew, down another 38 basis points, and that's now in the 10th percentile type range. HYG skew just getting crushed there day after day, a little bit similar to what we saw in S&P recently. Okay. So now let's talk crypto, because it's a bit hard to avoid it, really. So the biggest story in markets yesterday was the collapse of FTX. And with it, Sam Bankman-Fried, SBF, as he's known, his multi-billion fortune getting wiped out in 24 hours. We won't go into all the details here, but in summary, crypto markets, all of them have crashed pretty much over the last 24 hours. You can see in the graph here, the main ones that I track, we've got Bitcoin actually performing the best, down 15%. But the likes of ETH are down more. Solana really taking a pounding, down 44%. And FTT, which is the FTX native token, is down 80%. And this is what caused the problem in the first place, because they were holding, Alameda was holding too many of those on their balance sheet. And it basically started to smell and look like a bit of a Ponzi scheme. And the market went after it. And it's very similar to the type of stuff we saw with Celsius back a few months back. Now, the fact that one of the biggest players in the space could disappear in a day just because someone decided to sell a large block of their token is going to put some major question marks on the whole crypto space again. And it really takes us many steps back from this full-scale adoption that the space kind of obviously is working towards. Calls for more regulation and transparency across the industry. Ongoing liquidations and de-risking is going to be a hangover for some time. So whilst you might see some bounces, because when something just drops 40%, a bounce is to be expected, I wouldn't expect any of these bounces to persist. And I think the lows are not in yet. There's a big technical level that Bitcoin's testing as we speak in that kind of 17.5K area. If that conclusively breaks, don't be surprised to see it at 15K by the end of the week, if not lower. So I think crypto's in a very, very precarious spot right now. Now another thing we're looking at is value versus growth. So value versus growth is a theme that's, people have been banging the drum about a little bit recently. If we look at last earnings season and we look at what the big tech names, the growth names, what they did, it was a bit of a shit show. So you had obviously Apple, Microsoft, Google, Amazon, Meta, all of them down. Meta and Amazon down kind of 25%-ish each. So really the generals of the market have fallen. Okay, these were the last stocks to fall, and now, you know, even they couldn't post decent earnings, and we're seeing that. The theme of value versus growth has been reemerging. Some prominent market commentators are out there and of the opinion that value stocks are going to lead us out of this bear market. Who knows when that will be? I don't think it's yet, but at some point, value stocks are going to lead us out, and that's kind of where you want to be chasing or parking your money, because these stocks actually do have some value because they have some earnings and they've been heavily discounted in the weakness of the market, whereas some of these tech names are still not really cheap enough. That's the idea. So we saw a similar sort of thing in 2003 to 2006, when value really did lead the way out of that bear market. So people are potentially calling for something similar. So now that's not necessarily going to happen in the next month or two. It could be a long-term theme, but it's just something to have on your radar and be thinking about. Now, one way to express this relative value trade is through the Russell versus NASDAQ. So if we look at the chart on Russell versus NASDAQ, we can see that, and we're going back all the way to 2008 here, this thing has been in a secular downtrend for ages, okay? But recently, with the recent uptick, it is testing that downtrend. So it's not far from testing that downtrend. So you see here. Now, the question is it going to break? Because if it breaks, then, you know, arguably the next sort of area it goes to is that, which is a pretty big move, okay? So, you could see outperformance there of another quick sort of 10, 15%, let's say. If it fails, obviously, you know, we could roll back over again, and it might be because we see tech outperforming or whatever it is. Hard to see that given the rates outlook. But, you know, there's an inflection point potentially here, something we need to pay attention to. So the question is, how would you go about playing that? And is there any trade that you could use to play that potential break if it comes? We broke a bit of a technical level on gold. We're kind of heading to the next one. If that one breaks, all hell's probably going to break loose. Personally, I don't think that's going to happen. I think the dollar's going to bounce at some point. I think the dollar's had a decent correction, and I don't think necessarily we've seen the ultimate top in the dollar. Kind of depends what happens in terms of inflation data, etc. So I'm not chasing it. You guys know, the guys who have access to our options overlay portfolio know what I did in silver in my hedging portfolio. I'm not chasing this rally in precious. They did have a good day on the back of crypto, but personally, I don't think it's going to last. All right, that's it for today. Thanks a lot for listening, everyone, and I'll catch you tomorrow.